How does Lemonade Insurance work? It works like insurance. You pay a premium, and if you have covered losses, they pay them. There you go, pretty simple. And it goes downhill from there. 1. From the coloring book appearance of the website to the friendly, chatty wording, the appeal appears to be to people who lack the ability, time or interest to pay much attention to protecting their assets. Instead, they want cool fun. Insurance is not cool fun. It is monstrously complex, serious business. 2. Lack of personal service, human contact. Everything is through an app, driven by AI. And we all know from our experience on Quora how AI is working, don't we? 3. Inferior coverage, strange limitations. Seems that way. On their FAQ, they note that liability from dog bites is not covered for certain breeds. No exclusions like that exist as standard language on my policy. They also note the perils covered are for 16 bad things, or perils, and also covers extra living expenses, if one of those covered things happens. Sounds like they're talking to grade school children. And they don't even tell you what those 16 things are, or note exceptions, exclusions which are bound to be there. Me, I'll take all risk, thank you very much. 4. Restrictive underwriting? Maybe. Lemonade styles itself as insurance for urban dwellers. Does that mean they don't accept rural dwellers? I don't know, but if what they are really saying is that they only want risks in highly protected areas, then maybe they are a bit more exclusive than they appear. 5. Nonsense charitable support. Definitely. Presented as a social benefit, Lemonade says that in a good year, they'll give some of the unused portion of your premium to a worthy cause. But guess what? You won't receive the potential tax benefit that you would if you gave the money yourself. No thanks, if we have a good year, then lower my premium or send me a dividend. I'll take care charity, myself. 6. Erroneous, confusing, misleading information. Dreadful. I actually went through the quote process, which starts with this loathsome fake conversation with Maya. Am I supposed to believe I'm communicating with an actual person? Sort of like believing that Betty Crocker or the Tidy Bowl Man are real. Lemonade decided to select my property coverage limits based on their scan of public records for the property involved. I guess that's where their AI comes in. In the brief coverage outline, the perils insured are named perils, not all risk, which is the more common coverage. Worse is the all too cute and friendly explanation as per this sample. Worse, their seemingly liberal interpretation of bad weather isn't even true. But not to worry, they have a link to a sample policy. And guess what? It is a standard ISO, HO3 form. Now as it so happens, the HO3 is all risk on the structure, which is much better than what Lemonade tells me through its pictures and verbiage above. So what is it? Named perils? Or all risk? I dunno, do you? I won't get into the specifics of their business structure, discussed in other answers. But for all practical purposes, for an actual buyer of insurance, stay away from this sorry outfit. Don't drink the Kool-Aid. Lemonade takes a fixed commission out of your premium of 20%, and another 20% every year you renew with them and pay another premium. So if you pay $1,000 a year for home insurance, they will take $200 of that a year, book it as revenue, and the other $800 goes into actually covering damage to your home and stuff. The $800 gets split into two parts. $400 for immediate short-term payouts, or claims made by policyholders. If the claims made by customers in a given year is light, and there is some of this $400 left over, they donate the leftover to charity. This is to encourage people to not cheat the system, and prevent insurance fraud, because you are effectively stealing from a charity instead of the insurance company. Up for debate if this actually works. The other $400 is set aside for long-term, bad years, or catastrophic payouts where there are a lot of big claims. Instead of taking all the bad year risk themselves, they buy reinsurance. It's like insurance for an insurance company. So if there is a really bad loss year, they can still afford to pay out the large dollar claims and don't go bankrupt. However, of the $400 in reinsurance, Lemonade says that they only buy $200 of this reinsurance externally, and $200 of this reinsurance they keep in-house. Meaning, half the time, your bad years are basically being reinsured by other policyholders, kind of like a standard insurance company. So in summary, Lemonade, $1,000 policy Lemonade fee, $200 reinsurance, $200 internal plus $200 external equals $400 claims and charity, $400 standard insurance, $1,000 policy standard fee, $100 to $200 reinsurance, $0 to $250 claims, the rest. So in reality, they are not too different. Lemonade has a sexy feel and look, and had talked a lot about creative new ways to market their product, but at the end of the day, they are just another insurance company with newer tech and a "we donate to charity" clause. Keep in mind they are not donating to charity out of the reinsurance pool, but just the short-term, expected claims pool of $400. If their claims models were 100% accurate, they would not have any money left in this pool to donate to charity.